Hey everyone, and welcome back to another video. In this lecture, we're going to be talking about insurance. So here are the elements of an insurance policy document. So the first bit is the declaration, and this involves the policyholder as well as the insurer. And then we have our terms. So this includes what's going to be insured and what's not going to be insured. And then after that, we have our conditions, and then we have our exclusions. So here's the insurance policy elements continued. So then we have our deductibles. So this is how much you yourself are going to have to pay like out of your own pocket, because insurance doesn't cover everything. And then we have our copay or co-insurance. So this is the fixed amount of money that healthcare insurance is going to pay for your medical services. So for other areas, this is called co-insurance, but it's called copay for medical. So for healthcare insurance, it's called copay. So these are the steps for making insurance. So first you make the rates, and this involves making the policies. And then you can sell the insurance through an exclusive company agent or an independent agent. And then you do what's called underwriting. So basically in this step, you're assessing the risk and then using the given information to finalize and to make a final decision. And then afterwards, you invest. So whatever excess money you have, you invest that and ensure that it grows. And then in the event that somebody issues a claim for damage, so a claim for damage is like what it sounds like. So the person being insured is claiming that their items and whatever the insurance covered got damaged. So when they do that, these claims are validated, and then according to the terms and conditions as well as proper analysis, the person filing the claim is then insured. So there are two types of insurance companies. So the first kind is called a stock company, and the second kind is called a mutual company. So a stock company is a public insurance company, and this is where there are investors, and the profits made by the stock company are shared amongst the investors. And in the case of a mutual company, it's owned by a pool of policyholders, and profits are split amongst them. So there are many forms of insurance. So the first kind is called credit insurance, and this is for when you're unable to pay your loans or credit. So in the event that that happens, you get insured. And transportation insurance is when during shipping, like in case your vehicles get stolen, burned, or many other things like that, during transportation, you're going to get insured for it. And the next kind is called comprehensive property insurance. And as the name suggests, this is a comprehensive list of coverage options for many kinds of property-related financial loss that could happen to you. And the next kind is called business owner insurance. And this is meant for smaller businesses. And in smaller businesses, it's less comprehensive because smaller businesses don't necessarily need everything in the CPI. And it's flexible based on what the business actually needs. And next we have title insurance. So this is for land or property. And for land or property, if there's ever an issue with the title, and for those of you guys that don't know, title is just who the property or the land belongs to, you'll be covered with the title insurance. And then we have crime insurance. So this is where if any crimes like lead to financial loss, you're going to be insured for it. So let's talk about vehicle insurance. So vehicle insurance covers collisions, medical payments, uninsured motor risk. So this is if the uninsured person hits someone else. And then we have property damage, and then it also covers bodily injuries, and the comprehensive version covers car damage caused by hail, vandalism, and things of that sort. Then we have personal insurance. So this is also applicable for people in the business, and it covers unemployment, health, retirement, Medicare benefits and Social Security, life, disability, and long-term care. So for long-term care, if somebody has to be taken care of in the long term, or if they need to take leave for whatever reason, they're going to be insured. And this also includes dental and vision care. Then we have liability insurance. So there are two types. So the first kind is called civil insurance. So if someone discriminates you for non-financial reasons, and like say they discriminate you on the basis of your race or gender or something like that, and this leads to a lawsuit or a court case, you can get insured with the civil insurance. And the next kind is called crime insurance. So if somebody commits a crime within the business, then the business gets insured for that. So in Enron, for example, the executives were providing false financial information to make their stock look good, and suddenly they went bankrupt. So they got insured for that. And that's it for this video. Thank you guys so much for tuning in, and I'll see you in the next one.